Hey everyone, it's Saturday morning, December 28th, and welcome back to Capital Markets Quickie. I'm your host, Endrit Cela, here to break down yesterday's market action in just 2 minutes. Let's get started. Before we dive in, a quick note, today's episode is sponsored by AMF Capital Asset Management Frankfurt. For tailored investment solutions and top-quality mutual funds, visit amf-capital.de. So, Wall Street closed out the holiday week on a bit of a sour note. The Standard & Poor's 500 fell 1.1%, while the Nasdaq dropped 1.5%, and the Dow slid 0.8%. Not exactly the cheerful end we were hoping for, right? A big part of the pullback came from tech stocks, which have been absolute stars this year. But on Friday, some investors hit the brakes, taking profits and rebalancing their portfolios. Tesla, for example, tumbled 5%, Nvidia gave up around 2%, and even Amazon slid about 1%. But here's the silver lining. Despite Friday's losses, both the Standard & Poor's 500 and the Nasdaq posted weekly gains of 1.8%, with the Dow close behind at 1.5%. Not a bad way to wrap up a year full of major market wins. Now looking ahead, there are two big themes on everyone's radar for 2025. First, the Federal Reserve. The markets have mostly come to terms with the Fed's plan to slow down on rate cuts next year. Current bets are pointing to May as the next time we'll see a rate reduction. Why the wait? Inflation is still hanging around, and the Fed's also watching a labor market that's showing signs of cooling. And second, Donald Trump. With his return to the White House, all eyes are on how his ambitious economic plans will play out. Some experts are saying there might be a few reality checks ahead as other key players weigh in. That's your quick market wrap. Thanks for tuning in to Capital Markets Quickie. I'll be back on Monday with more updates as we count down the final days of 2024. Have a great weekend, everyone.